So I think tokenization in the financial services really, I think, a significant driver. So if you look at, let's say, deposits, now it seems that there are about $100 trillion worth of deposits around the world. And is that a low-hanging fruit? Is that something that a lot of banks, not the big banks, but the mid-size and the smaller banks could also do, because everybody has deposits?
Yep.
And what's really the flow? I mean, who are the players in the ecosystem? How do they all benefit?
Great question. I mean, I think from a banking perspective, by far the lowest hanging fruit is that's the engine of banks is deposits, right?
Yeah.
There's nothing else really. Everything flows from that, right?
Yeah.
Going back to the flow. So tokenized deposits are probably the lowest hanging fruit as it relates to outside of just adopting a digital dollar format. Stablecoin. You have banks like JP Morgan has their own stablecoin called JPM.
Yeah.
Many of the banks, I believe, will have their own stablecoin. So they're going to have their own stablecoin that would represent a tokenized deposit, which also represents a dollar, a US dollar in this case. The parties involved is the bank. Of course, they're also a custodian, right? When we're thinking about this way. And we have their retail customers, assuming they're both a retail and business banking construct. That's really the tri-party. Of course, there's multiple entities and legal and frameworks that happen there. But like in simplification of who benefits here and where the flow is banks are able to bring that digital dollar format. First, they have to have that foundational layer, create their own stablecoin or use an existing stablecoin like USDC that's regulated through the Genius Act, and build on top of that. And ultimately, what that's doing is the value for the bank is now they're opening up 24/7 money movement. That benefit flows to them and away from them, meaning it also brings value to the consumer, to the retail customer. They're able to essentially, like $100 example, a retail customer deposits $100. That $100 can be available immediately in digital tokens, where they're able to settle 24/7, buy, sell, and all of that's within the banking ecosystem. So instead of using like a credit card, this can actually be a lot cheaper as well. Transactions. The bank, and really as we have a lot of these consolidation efforts within banks, I see tokenized deposits being even more of a reason of it's a stickiness factor for banks, particularly community banks and even smaller regional banks. Is how do you build that subscription model, if you will, of deposits that are coming in, and how do you provide that value to your customer? From the retail side, they're seeing benefits of 24/7 access, quick payments and settlements.
Right.
They're also able to leverage that even cross-border a lot of times, because if this digital dollar can become an FX exchange much easier than being just domestically rooted. It opens up significantly more opportunities for businesses, because businesses, this could be collateralized for loans. Again, this can be cross-border. They can make payments to their vendors. There's a number of applications that can be installed there. Plus, as we've seen with credit cards, a good example is Amex, with the way that they do all of their rewards programs, right? With your own tokenized deposits, you can have even more outside of just basic interest that you provide. There's all kinds of other reward programs you can build into that. So your customer value can increase significantly if you do this right. Not just for you as the banking client, but also for your end clients, whether they be business or consumers.
Right.